Silver has been the best performing commodity of 2016, and in appreciation of our listeners, Palisade Radio and Palisade Research are giving away a free American Eagle 1-ounce silver round each and every week for the rest of the year. Just visit palisaderadio.com and enter your email for a chance to win. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the show with us today is returning guest and author of the Gloom, Boom, and Doom Report, Marc Faber. Marc, welcome back to the program.
Well, thank you very much for inviting me.
Last year we had you on the program and you claimed that gold and silver shares were the only asset class that was both relatively and absolutely depressed. This year has been a great time for gold investors. Gold stocks up over 150%, the actual metal up about 30%. Does that statement still apply today, Marc?
Well, let's put it this way. If I compare the world's financial system today to what it was a year ago, we have now in Europe over $12 trillion worth of sovereign bonds that have a negative yield. We are close to record low interest rates on U.S. Treasuries. And the debt level in the world has grown significantly. We have a colossal credit bubble in China. And although the Fed has essentially completed QE3 and they have not yet implemented QE4, we had further asset purchases in Europe, ECB, Bank of England, and also the Bank of Japan. So when I compare the price of gold and platinum and silver to all this increased paper money that has been created essentially out of thin air by central banks, then I don't think that gold and other precious metals, silver, platinum, are particularly expensive. In fact, we had a big move, as you pointed out. Correction is likely, and following the correction, I think we'll have further upward moves.
Marc, all of the problems that you outlined there that have led to this gold rally were at least in the makings for the past couple of years, and it led people like yourself to identify that gold would ultimately be a good place to invest money in. Were you able to identify just why at the beginning of 2016 things finally started moving in the right direction for gold investors, or is it just simply a cure of low prices causing higher prices?
Well, as a student of markets since 1970, I can say you never know exactly why on a particular day the stock market starts to go down or on a particular day it starts to go up. It could be a week later, it could be a week earlier, it could be a year later, it could be a year earlier. The markets are grossly distorted by paper money, by this liquidity bubble that basically has been created by central banks, and it's grossly distorted by central banks. They call it maybe quantitative easing, but basically it's manipulation of markets, manipulation of interest rates, and then the central banks monetize also stocks. In Europe, we have the National Bank of Switzerland, in Japan, the BOJ, that have been actively buying stocks directly. So the markets are no longer really trading on what I would call sound fundamentals in a sound economic system where the quantity of money is relatively limited. We are trading essentially in virtual reality, in a fantasy land that is driven by these money printing exercises by some, in my view, insane professors at central banks.
Marc, by many measures, the U.S. stock market and several stock markets around the world are overvalued. However, with negative rates growing at an exponential rate, you have money seeking yield. And while gold pays nothing, it's better than being in the bond market, which it sometimes can pay you back less than you put in. The stock market, at least, is still paying above 2%. And for that reason, it's one could argue that money will continue to seek out that 2% yield despite the danger involved in having a market crash. Why do you anticipate there being a potential crash?
Well, basically, the U.S. stock market is now at the most expensive level compared to other markets in the world it's ever been. So we have a wide divergence in the performance of the U.S. stock market and other markets in the world. And it is true that the dividend yield now on the S&P 500 is higher than on the 10-year Treasury. That I agree. But just look at this year. Brazil, in dollar terms, is up more than 60%. Russia, around 25%. In Asia, Indonesia is up 24%. Thailand up 21%. And Vietnam is up 10%. So we had big moves in other markets than the U.S., and I believe other markets will perform better than the U.S. And I think if you look at why the market in the U.S. has gone up, money printing and stock buybacks, but no revenue growth, no earnings growth, then in my view we are in a vulnerable position, and I would stay out of U.S. equities. Now, if you turn around to me and say, well, Mark, the world is a big place and some sectors in the U.S. are inexpensive, then I say, yes, you're right. As I said, the gold sector, the mining sector is very inexpensive. Agricultural companies, fertilizers companies are inexpensive. Coal companies are inexpensive. So there are segments in the market that are not particularly expensive. Are they going to move up a lot? I'm not so sure.
As you pointed out earlier in the interview, the baton of money printing has been passed around from one central bank to another. Currently, the ECB and the BOJ are printing, but the U.S. has stopped for now. You're claiming that QE4 could be in the cards. What would kick off a situation where the Fed would announce money printing, and wouldn't that really be a reputation killer for the Federal Reserve to go ahead and do a fourth round?
I like when you talk about wouldn't be it a reputation killer. In most people's view, the Fed has no credibility anymore. This is an informed view by many people as well as an informed view about other central banks. They have no credibility. Basically, they watched the biggest financial bubble occur in 2008. Then they slashed interest rates to zero. And by December 2016, we'll have in the U.S. next to zero interest rates on the Fed fund rate for 8 years. And what has it done to the economy? The economy is very soft. We had today the announcement, and I stress in quotation marks, the announcement of great job numbers. Probably they're not as great as they've been made up by the government. But never mind, the fact is the economy compared to other expansions has been performing very poorly, and amidst enormous growth in debt. The debt under Mr. Obama, the government debt has grown from $8 trillion to now $19 trillion.
The negative sovereign bonds have gone from essentially zero just a year ago to already $12 trillion as an asset class worldwide, and probably by the end of this year could hit up to $25 or $30 trillion. So it's growing at an exponential rate. What are the implications of negative bonds. I don't think a lot of investors, they hear it on TV, but they kind of pass it off and brush it off. What does it mean, and when does it stop?
Well, what it means is, for you personally, if you buy a 10 years, say, JGB or Swiss or German bond at the negative yield, it means that you can only lose money. There's no way you can make money over the duration of the maturity. Now, if short-term rates or bond rates drop even more into negative territory, temporary, you could basically make some money. But in general, it means the future returns are going to be very low. It also means the pension funds are in deep trouble. The insurance industry is in deep trouble. What this means is either they have to print money, or the insurance premiums will go up and the pension fund contributions will go up. So these are basically the consequences of these artificial low interest rates. And the one thing I can guarantee you and your listeners, these negative interest rates will not stay negative forever. Something will give. And when that gives, we don't know exactly what the mess will be, but I would assume that it will be complete. Because in 2007, when the bubble burst, in 2000, when the tech bubble burst, interest rates were still relatively high. Now, as you said, they are around the world essentially around 0%. And in the U.S., the Treasury, the 10-year Treasury note yields 1.56%. It's also very low yield. It could still go lower. I mean, I'm not arguing that 10-year Treasuries are attractive, but I'm arguing if you have the choice to own a 10-year Japanese JGB at the negative yield in a country where the government debt is much higher than in the U.S. and where the currency, it could strengthen first, but in the long run, I suppose it will weaken. Or you could own 10-year treasuries at 1.56%. I think compared to cash and to JGBs and to the $12 trillion of European sovereigns that are trading at negative interest rates, I think the 10-year treasury is relatively attractive.
Well, continuing on that thought process, the United States appears to be in a good situation compared to the other large countries of the world. The dollar is performing well over the last year and a half. We still have a positive yield on the bonds. Do you think that the U.S. bonds will go negative? And what do you think will finally, kind of crack the U.S. dollar? I know that you're not a bull on the U.S. dollar.
To both questions, I have to answer, I don't know. My sense is that the U.S. dollar is not going to be a strong currency because if you look at the U.S. Trade deficit, the current account deficit, it's actually not improving. It's improved somewhat because of the self-sufficiency in oil, but if you look at goods, the trade balance in goods, it's been deteriorating continuously. In other words, the U.S. is not very competitive. And I live overseas, to be precise, in the north of Thailand. And under these conditions, I would say I can see that many services, anything that has to do with legal services, with accounting, with auditing, with software, can be produced or provided overseas at much lower cost than in the U.S.
Well, Marc, I find you to be quite the comedian at times, whether intentional or not, so let's end on a bit of a lighter note, maybe some commentary on the U.S. election cycle. You've been asked the question several times, Trump versus Hillary.
Well, what do you want to know? It's actually not a particularly encouraging fact that in a democracy of the superpower of the world, of over 300 million people, which is not the most affluent country on a per capita GDP, but in total, they're still the richest country in the world, and you have a lot of intelligent people, you have the best universities, and you have great companies, that all they can produce are the two candidates that are now running for the presidency of the U.S. One belongs to the Clinton gang. I wouldn't call them a mafia, because the mafia would be insulted that the Clintons would be called a mafia. The Clintons is a devious couple that has been followed everywhere they went by irregularities, lawlessness, dead bodies, and so forth, corruption, and so forth, and so on. And the other is a candidate who I admire to some extent, because against all odds, he became the presidential nominee of the Republican Party. And everybody in the Republican Party was basically against him. That by itself is an achievement. So he's not a completely dumb fool. But should he be president? I don't know. Can't the Republicans find someone more qualified for the job? That is the sad part of, and I think maybe we have to revisit, is democracy really the best possible system? Maybe not.
All right, well, Marc, lots of questions there. We'll have to see who ends up winning the election. It's a close one right now, and it's certainly fun to watch from the sidelines. Thank you so much for coming back on the program. It's very insightful, and hopefully we'll get you back here soon.
Okay, bye-bye.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen, or are you too stupid?